Peter Schiff joins us, CEO at Euro Pacific Capital. Peter, we've covered just about, or tried to, on a day the Dow's down 800, every angle here, from bond market bubbles to whether a recession is coming to what the presidents would do and the Fed and what have you. But I know, as you always do, you'll add a different and unique perspective. So what's the Peter Schiff take on today?
Yeah, well, first of all, you have to understand that everything that the Federal Reserve has done since the 2008 financial crisis was a mistake. And all they did was succeed in making all the problems that caused that crisis worse. Now, they covered it up by inflating an even bigger bubble than the one that popped in '08. But by trying to normalize interest rates, by trying to shrink their balance sheet, they pricked that bubble. And now we're going to complete the economic crisis that they interrupted in 2008, except the back half is going to be much worse than the front half.
In what way? So what do you think, or what do you predict is going to happen next?
Well, we're headed for a recession. It's going to be worse than '08. The Fed is going back to zero. They're going to do QE again. It's going to be bigger than the first three rounds combined, but it's not going to work. The Fed is done inflating asset bubbles. All the inflation is going to go to the supermarket and the gas station. It's not going to go into the stock market. The dollar's going to go through the floor. It's going to take the bond market with it. And the next crisis is not subprime mortgages. It's going to be in the Treasury market. It's going to be a sovereign debt and a currency crisis. And this is going to be an inflationary recession. There is no way out. And it's political disaster for Trump, because the recession is going to start before he finishes this term, which means he won't have a second term. But the worst part of the recession is going to take place on the watch of the next president.
How do we get there from here?
Is this
There's
Bill
so
Maher?
much capital. Is it Bill Maher? Is that what you said?
That's what I said.
No, Peter, how do we get there, Peter, from here? In other words, if there's so many problems around the world, which we know that there are, and the capital, because of that, is flowing into the United States for the time being, that supports our currency, right? And money's coming into Treasury. So how does that all unravel? I mean, what happens?
Yeah, that capital is going to flee because, see, people have made the mistake. See, initially, everybody believed the Fed was going to be able to normalize rates and shrink their balance sheet. And I knew they couldn't do that. And the Fed finally aborted the process. But the markets still believe that, we somehow got a better economy, that our rates are going to be higher, that we're going to avoid recession. But when they realize that that's not true, when the Fed slashes rates by a lot more than people think, they're going to flee from the dollar, especially when inflation continues to rise, even the way the government measures it. As we move into this recession, consumer prices are going to rise even faster. And once the dollar starts to fall, that's going to push consumer prices up even more.
So how do you explain the fact that we haven't seen stagflation? How do you explain the fact, though, that we really haven't seen, despite so many predictions that are similar to that we would by now have seen some actual inflation, more than what we've seen in government data, that it hasn't been more than it is? How do you explain, how?
Well, first of all, yesterday we got the first back-to-back 0.3% gain
in the
core
CPI
since 2001. But a lot of the inflation that the Fed created originally showed up in asset prices, stocks, real estate, bonds, other things like that. But that inflation is going to move from asset prices to goods prices, especially as confidence in the dollar and the U.S. economy is lost, and when the markets start pricing in a Trump loss. Because right now, everybody thinks a Trump victory is a sure thing. Just like nobody believed he could win in 2016, everybody thinks he can't lose in 2020.
Meaning everybody, meaning you mean investors. I mean, the polls shows, I'm not sure if 100% of everybody thinks, but you think there's an investment bet on the re-election. That's what you're saying.
And I remember, nobody thought he could win in reality. If you go back to 2016, people thought it was crazy. I was one of the few people out there that came on television and said, I think he could win. I think people are underestimating his chances. Well, now I think he's going to lose, because I think the recession is going to start before the end of his term, and it's going to be blamed on him. George Bush was able to get reelected. The Fed bought Bush a second term after the dot-com bubble popped by successfully inflating a housing bubble. But that bubble popped before Bush got out of Dodge, and that meant McCain had no chance, and we elected Obama. Well, this time the Fed is not going to be able to inflate another bubble to save Trump. It's going to blow up on his first term, and the Democrat who follows him will be a socialist and will be much worse for the economy than was Obama.
So the market will try to price that in. Right. Well, and the market will. Your point is the market will try to price that in if you're right, and then that's bad for risk assets as well. I mean, we'll see. One thing you're definitely right about the timing of these political events, because back to George Bush, his father would have loved better timing before the '92 election in terms of how the economy was recovering. Right. Anyway, Peter, thanks. We got to run with everything going on, but we appreciate the perspective.